Stephen's here with business. We're starting in the US today. The EU's competition commissioner, she's been facing her critics, hasn't she?
Margrethe Vestager has come under fire from various quarters, including the US Treasury, for what's perceived as anti-American bias in the EU's competition investigations. Now, her visit to Washington came as a new inquiry was announced into the tax affairs of the French gas company Engie. But much of the focus was on the Commission's demand that Apple repay €13 billion in taxes to Ireland. Our correspondent Philip Crowther reports from Washington.
This is an iPhone. Well, do you know how difficult it is to get the 7 in Europe?
Yes, the European Union Commissioner uses an iPhone. This is the same antitrust leader who is standing by her decision to demand up to €13 billion in tax repayments from Apple. On her first visit to the US since that decision, she faces accusations of unfairly targeting American companies.
It is very difficult to make the equivalent. How would we react in Europe if we found that a European company was in a legal situation in the US? I don't know.
EU regulators have also targeted the likes of Amazon, McDonald's and Starbucks. In Washington, the reaction to that was one of anger.
They strongly disagree. But I think it is very important to be here and take the discussion in person so that we know that we disagree on real issues and not on misunderstanding or misinterpretations of how we do things.
The US Treasury Department accuses the EU of turning itself into a supranational tax authority.
Everyone here, and that includes me as well, thinks that Commissioner Vestager has gone far too far.
The visit to the US of the EU's antitrust commissioner coincided with a new announcement.
I'm wondering if my brief tweet will make it.
France's biggest gas distributor is also now being investigated for its tax deals in Luxembourg, a possible move to appease the critics who accuse the EU antitrust authorities of anti-US bias.
Turning to the UK next, it might not, after all, be all doom and gloom for the banks.
The ratings agency Moodys has said that Britain's biggest banks could withstand the loss of so-called passporting rights after Brexit within the European Union. The system allows firms that are licensed in the UK to sell financial services anywhere in Europe. Now, Moodys says the impact of the loss of such rights would be varied across different companies, but that equivalence rules could allow many large investment banks to continue any of their current operations. This rather upbeat assessment comes after the head of the Bundesbank, Jens Wiedmann, warned that financial services passport would be lost if Britain leaves the single market. That debate going to rage on for quite a long time yet.
I suspect you're probably right. Now, the markets today, they're focused on the meeting of the Federal Reserve in the US.
And we're not expecting the Fed to raise interest rates at this meeting, but there's always a chance that Janet Yellen might surprise us. The America's central bank has repeatedly signalled that it plans to raise rates this year after a first rise last December in 9 years. But some weakening economic data in recent weeks has reduced expectations that this meeting will be the one that will see a rate rise. We'll find out more when the meeting ends tomorrow. Now, Japan's central bank is also beginning a 2-day policy meeting today. The markets in Tokyo are back in business today, and they're trading down as that meeting gets underway in Tokyo, down 0.25%, the Nikkei at the end of trading there. The market's also going to be closed on Thursday in Japan. It has to be said, so they're having a pretty short week. The Nikkei down slightly in trading today. The car parts firm Takata, their shares are down some 12%. That's after reports that some of the bidders for the company haven't ruled out the possibility of bankruptcy for those shares. We're seeing most of the Asian markets trading down, though, just the Kospi and Seoul trading up. Some more of the day's business headlines for you next, and starting in the United States, where regulators have fined professional services firm EY more than $9 million for being too close to their clients. The Securities and Exchange Commission found a senior partner at the company had an improperly close friendship with the client's chief financial officer and had spent more than $100,000 on corporate entertainment for them, while another was found to be in a romantic relationship with the firm's head of accounts. The fine was handed down because EY failed to take appropriate action to maintain their independence. Samsung says reports of its latest smartphone exploding in China are not being caused by faulty batteries. The firm had been criticised for not including China in its global recall of the Galaxy Note 7 around the world. The company says the phones it sold in China weren't faulty. Samsung now says that at least one of the fires reported in China was caused by external heating. And a strike's been avoided in Canada's motor industry. The auto workers' union Unifor says it's reached a deal with General Motors over new contracts. The deal guarantees the future of the plant at Oshawa near Toronto and gives pay rises and lump sum payments to most workers.
Going to talk about a big launch now on the programme. Apple announcing a new product. This is to follow up on the iPhone 7.
That's right, the technology giant has decided to register its design for a shopping bag. The paper bag contains 60% recycled materials and has a specially designed handle made of paper fibres, which is made to be more flexible. The whole idea is part of Apple's attempt to go more green as it uses more recycled materials. And it is a paper bag as opposed to plastic, of course, but it may perhaps disappoint people who are expecting something a little bit more exciting to come out of Apple after the iPhone 7.
Does it have a headphone socket?
It doesn't have a headphone socket
It doesn't
either,
have
no.
a headphone socket. There you go. It's with the times, at least. Thanks, Stephen. Stephen with business.